Hey, what's up, guys? I wanted to do a quick back of napkin underwriting on a property because a few people ask me, Vic, how do you write your deal so quickly? Sometimes without all the information. You don't need all of the information to know whether to keep looking at a deal, but there's a couple of things that you do need. So I'm going to go over a deal that we just looked at. The deal's already in play. I think it's already probably in due diligence now with a bigger group that got after it. But what I tend to do is I look at the current rents right now, not current market rents or what is the market around it, but what are the actual, it's called in-place rents, or what is the rent that they're collecting on now. So on this specific property, it was $25.50. You would do $22,650 per unit, right? And this is a 2016 build. It's fairly new, man. It's a Mac Daddy. It's a beautiful A-class property, A area. And those rents are still really, really low. To me, those rents are cheap. So you would do 2,000, you would do this 2,650 times 284 units, which is the number of units, bringing you here, times 12 months. That brings you to 9 million roughly. All right. So in this, I also go ahead. I don't always do this, but I'm doing it on this deal because it's the type of deal that I do it with. Plus another, I would say 3% for additional income on this specific property. That's pet fees, pet deposits, valet trash, specific parking spaces that people have paid for, things like that. There's other amenities at this property that's being offered. So the additional income on this property also gets added. So that brings us to $9.3 million, right? So now I'll minus 40% for expenses on this deal. 40% of that is there. That leaves us with a $5.5 million NOI on that deal. So on this deal, when I underwrote it at 0.05 on a cap rate. So I used a 5 cap to see where we were. That brought us up to $1.111 million for potential offer range. All right. So, and then you can play with that, but that's what I tend to do. So in this specific deal, with that $111 million offer, I just divide that number by the number of units, which is 284, which puts us down to a $393,000 a door for a 2016 product in a property, A-class area, unheard of. Now, I know this deal actually went that range that the groups that actually are moving forward with this deal somewhere around 120,000. So we weren't far off. We were literally about $10 million off. And the reason why that happened is because here, let's do this. Here's how we get back. So we'll take the 393, which was the number of units, 384 times that. Now we're back to our initial offer price. So we'll back that out. Now we'll go times 0.05. Now we're back to what I say our NOI. So that broker said, hey, this deal is still trading at 4.25. So if you take that same number divided by 4.25, they're somewhere at around 430, which he said that they're in that range of 122 million plus. So I'm thinking that's where they came in at. And even if my NOI is a little bit higher or lower from where it's currently performing, I have the financials. I'm just not going through the numbers because I just signed a confidentiality agreement on that. But even if I'm still in the ballpark, that was where if we were looking at a 5% cap rate on that deal, we would have come in around about 111 million. And then if we were to go the way that they did, we would have come in at 130 million, which they kind of met somewhere in the middle of that where they agreed, which was 120 million plus. All right. That is how I underwrite a deal pretty quickly. But to keep it simple, I go rents times the number of units. Then I go additional income. Usually, if it's a larger property, I'll go 3% of that. If it's a larger property, I'll go 5%. If it's a smaller property, maybe 100 units to 120, 150, I'll go 3% of that. Then I'll take that number minus 40% expenses. I usually stick with 40% expenses, but you got to know your market. Sometimes the expenses are going to be higher. Sometimes 40%, sometimes 47%. And some of these properties are going to be lower. They're going to be 37% expense ratios. I go a little bit higher because I know my taxes are going to change while the purchase of that property. So I start budgeting and insurances. All that stuff changes accordingly. So, and then after that, I know what my NOI is. And then I go, hey, look, if we can get a 5 cap, which is what our target is right now in this type of market, I underwrite the deal based on receiving a 5 cap, 4.75, 4.25. Then let's go nuts. Let's see what it would be at a 6. So I start playing a little bit to kind of see what I can get. Then I go back to the broker and I go, hey, here's where we're at as it relates to what I've underwrote. How close am I? What's the guidelines? And then I start delving through the financial package, go to the deal room, look at the financials, the rent roll, where they're currently performing at. And then I start matching up my back of napkin underwriting with where they are, as well as the price per door. 390, 390, even at their numbers. I wanted to share this with you. I think it's important to get. Let's say they're at 122 mil divided by 284 units. That's 429. So naturally, mine was different, but they're at 429,000 a door for a brand new A-class product. You couldn't build it for that in that same area. It's well below replacement cost. I think the replacement cost on that per door is probably anywhere from 550 to 600,000 for that product at that location, and it'll take you 2-3 years, well, really 3 years to build, no matter what. And that goes no cash flow, no nothing in this type of a debt market. So that deal is a steal, even at 120,000, 111,000, all the way up to 130. So just wanted to share that with you guys. That's my very quick underwriting, and that's how I look at these deals. And if you want to know more information, I got a ton of videos here, or you can reach out to me. You can go to bell-capital.com. Let's talk. I would love to talk to you. You can schedule a call. If you're interested in investing and seeing what we have, we always have Zooms coming up, as well as you can reach out to us and you can schedule a call with myself or someone on my team. We can answer any questions you have about your personal situation about investing with us, and we can go from there. All right. I hope this helps you guys. If you guys need anything, make sure to reach out. Looking forward to talking to you. Have a great day today. Let's get after it.